Over the past 15 years, some people turned 10,000 into 100 million. The other lost their entire life saving in a single week. This didn't happen in casinos. It didn't happen in traditional stock market. It happened in the cryptocurrency market. And if we do not understand why we do not understand the future of money, let's start with a hard truth. Most people who enter the crypto market eventually lost money, not because they are stupid, but because they misunderstand what kind of market they entered. Many think it is a stock market. It is not. Many think it is a traditional investing. Often it is a high volatility, sentiment driven system. According to multiple blockchain analytic studies, the majority of retail participants exist within their first market circle, not because the technology failed, but because they were not prepared for the psychological reality. They consider Bitcoin before 2010 almost worthless. In 2016, the price is about 1,000. In 2018, from the peak near 17,000 fell to near 3,000. In 2021, it reached 69,000. In 2022, dropped below 16,000. In 2024 or 2025, surged again. This level of volatility is almost non-existent in traditional finance. 70% drawdown is catastrophic in equities. In crypto, it is considered normal. If leverage is involved, one major drop can completely wipe out a position. So the real question is not, can you make money? The real question is, can you survive long enough? Now look at the other side. In the traditional industrial economies, building a 5 to 10 billion US dollar enterprises could take decades or even generations. In the digital asset economy, billions in market value can appear within months. Sometimes days we have seen memes, coins, community tokens, and political or celebrity linked assets reached multi-billion-dollar valuation in extremely short period of time. This doesn't happen because the traditional value disappeared. It happened because attention itself has become financialized. If crypto were purely speculation, it would have disappeared already. But it hasn't, because it solves a real problem for millions of people. In countries with high inflation or unstable currencies, Argentina, Turkey, Venezuela, many people convert local currency into Bitcoin or stablecoins immediately after receiving income. Not to speculate, but to preserve value. For them, crypto is not a gamble, it is a survival tool. Bitcoin introduced something new, a monetary asset that no government can print. Only 21 million will ever exist. No central authority can change that. Today, Bitcoin's total market value has reached the levels of comparable to majority global corporations and even some national economies. This is no longer an experiment. This is an emerging parallel asset system. In this market, long-term survivors usually share two traits. First, they understand the rules of the system. And second, they can emotionally withstand extreme volatility. Because crypto does something unusual, it amplifies who you already are. If you are disciplined, you reward discipline. If you are impulsive, it punish impulse. It is not just a financial market, it is a psychological one. So, what exactly is a cryptocurrency? It is not just money, not just technology, not just speculation. It may be humanity's first attempt to build a value system that doesn't rely entirely on nation states. And will it fully succeed? We do not know yet. But when hundreds of millions of people use something every day to store value, move money, and transact globally, it is no longer theoretical. It is already part of reality.